The uncertainties are going to be great. Think about the implications, let's say, AI is going to have on companies, who the winners and the losers are. Like, we have a lot more uncertainty about who the winners and losers are.
Given the current challenges in predicting short-term market trends, it's beneficial to consider the broader long-term perspective. This approach was recently emphasized by Ray Dalio, the billionaire founder of Bridgewater Associates, one of the largest hedge funds. Dalio suggests that the world is teetering on the edge of what he calls great disorder, marking the culmination of a long-term debt cycle that began post-World War II. Dalio, who has evolved into an amateur historian studying 2 millennia of financial and political trends, warns of a major shift. He cautions that the end of this extensive cycle could lead to unprecedented changes in both domestic and global dynamics, something unseen in our lifetime, but recurrent throughout history. Now, while some might view his outlook as overly dramatic, the critical megatrends that he identifies in his quote-unquote big cycle theory could provide valuable insights. These insights are particularly relevant for investors, regulatory bodies, and policymakers, including those on the new board set to oversee monetary policy at the Reserve Bank. Dalio's perspective offers a framework to understand the current market uncertainties and to contemplate the significant forthcoming challenges for markets and economies.
I'm a very practical market guy who's got a global macro investor who's got to place bets. And in my life, there have been a number of times where things came along that I never saw before, and they surprised me, cost me money. And then I realized that when I studied history, that they happened many times in history, repeatedly. So there were 3 things that are happening now in our lifetimes that never happened before, and that led me to do this study, and then I found that there are 5 big influences. Okay, the 3 things is the amount of debt and money creation, the monetization of the debt and creations of huge amount of debts. And I wanted to study the rises and declines of reserve currencies and all of that. The second is the amount of internal conflict, populism of the left, populism of the right, that is operating as that conflict, almost a threat to our system. And number 3 was the great power conflict between particularly China and the United States. So in my whole lifetime, the United States was a more dominant power, and now we have a great power conflict. So I needed to study those 3 things, and then in studying that history, I found out that the 4th force was acts of nature. Droughts, floods, and pandemics killed more people and toppled more orders than the first 3, so they're a big issue. And of course, climate is a very big issue, cost-wise, what it means. And number 5, of course, is man's evolution in their understanding, and particularly technology. And so we know that technology is going to be a giant force.
So, considering the economic instability, geopolitical conflicts, and technological, aka AI, revolution causing uncertainties, Dalio's principles can help the current-day investors to adapt to these changes and be successful. From his observations, we now know that 3 main things need to be kept under consideration these days, including the following. Number 1, debt and money. Number 2, great powers conflicts. And number 3, technology.
The first thing I need to do is convert it into data so that I can objectively see things. So you'll see in the book, for example, there's relative education levels, relative 18 measures that go back over the 500-year period so that you can see the cause-effect relationships. I then take those and convert those into indicators. And then that then helps me in my decision rules. I call those principles. But in other words, if this, and this is happening. So for example, I wrote the book about 3 years ago, and there's an arc there about the cause-effect relationships. And since then, there's the January 6th, there's the internal political conflicts, there are these conflicts, blossoming. And I understand them better because I know how to measure them and use them as indicators, such as economic warfare precedes military warfare. Doesn't mean anything is predestined, but when you can understand it like the progression of a disease or something, it's important. And I think that a lot of people make the mistake of seeing everything up close. And so they don't see a lot of the big things that are happening. They're focusing on today's news, today's developments, and then they don't have that arc. But there is an arc since over the last 3 years, it's sort of playing out in the direction of that arc. So I understand it better, I use the indicators, and then I make the decision.
According to Ray, in order to understand the whole scenario, focus should not be on today's news, but rather one must have a broader view. Go back and forth and see what happened in the past when debt was too much to be paid. What were the reasons which caused conflicts between powers, and how have humans been affected by technology? Studying the cause and effect relationship clears the picture for the investors. Doing so, even a newbie will be in a position to invest like a pro. So continue watching this video to see how we interconnect these above-mentioned 3 observations to the current scenario.
There's a world order and there's a domestic order. And so at the beginning, this world order began in 1945, the end of World War II. There's usually a civil war or an external war that changes who wins, who loses, and how the system works. Then a new system, a new order comes into power. And then at that time, then there's a rebuilding, and also nobody wants to go back to war, and there's a dominant power, because whoever won, nobody wants to fight the war. And because there's a restructuring of everything, it begins anew, that you eliminate the debts. You do that cleansing and then you rebuild. And that's a period of prosperity and so on, and it goes on. And people extrapolate that prosperity, they become comfortable with it. But the issue is then as they do that, they tend to acquire more debt for a variety of reasons. And also, when the country becomes the world's reserve currency, other countries want to save in that currency, and that creates more debt and more. And then also, by its very nature, capitalism creates very big income and wealth gaps. So as it emerges, you have these larger and larger wealth gaps, and you also have larger values gaps. So, and that happens domestically. Internationally, the same sort of thing happens in that countries rise. In other words, the gap in the control doesn't any longer remain dominant. So there's competitors and countries and so on, and they rise. And we don't have a legal system that resolves those disputes. So because of that, then you come into a period of greater conflict and later. So you have the elements that I talked about in the beginning, the debt element, the capitalism element, the splitting and between the various interests and also the wealth and the values differences. And then you have the great power conflict. Now how that's produced, what transpires is that after such a long time after wars, the new generation never experienced war, and then there is an inclination to have conflict. Because, and let's say today, I think we're in the environment that we see that you have to pick a side and choose. And then there's a conflict on that side. The idea of compromise sounds weak. It's one of those things, compromising what's essential to me? I can't do that. And that creates then threats in the system.
And you're describing the current, that's how you see the current moment. That's where you see us right now.
Yeah.
The present global structure is referred to as the American World Order after World War II, during which the U.S. emerged as a global power. In 1944, the Bretton Woods Agreement laid the basis for a new international monetary system, making the dollar as the reserve currency around the world. Being the world reserve currency is pivotal for a nation's wealth and influence. Earlier to the era of the U.S. Empire and the adoption of the dollar as the world's reserve currency, it was the British Empire, having the pound sterling reigning in the 19th century. Preceding them was the Dutch Empire and the Dutch guilder in the 17th century. History proves the vulnerability of the reserve currencies being eventually replaced. Therefore, today's investors are thinking when, whether, and what may cause the decline of the dollar as the world's reserve currency, and how it's going to change the world order. Following Ray's stages of the rise and fall of empires, the U.S. economy is on stage 5, which is characterized by huge differences between the wealthy and the normal people, excessive debt creation, technological revolution, climate changes such as pandemics, droughts, etc. In other words, the world is at the brink of disruption. Debt and money. Dalio has shared his concerns related to political as well as economic instability in the U.S. Extreme levels of government debt, huge financial inequalities, all of this is increasing the chances of civil war to between 35 to 40%. We are seeing excessive debt levels being monetized not only in the U.S., but also in Japan and the Eurozone. All of these are the three principal holders of global reserve currencies. Eventually, this excessive debt monetization will lead to the depreciation of their respective currencies and the assets tied to these debts. It represents commitments to receive devalued currency, leading to increased inflation. Moreover, we will also see an increase in gold prices rather than a reasonable decline of one currency against others. So in short, we are heading towards the monetization of debt and the devaluation of all currencies. Ray says that he can foresee this as a pattern to persist for several years. Great power conflict. On the geopolitical side, China is pretty much vulnerable to several risks. It's due to the burdens incurred from conflicts across Europe, Asia, and the Middle East. Economically, the increased tariffs related to exports and dumping accusations cause the issues related to overcapacity in Chinese industries. All of this seems to be moving towards severe economic warfare. These increasing geopolitical uncertainties and risks are affecting business activities in China. Foreign investors are reluctant to invest in China, and this even includes Chinese firms as well. Considering all these things, people are more inclined towards investing in Japan, since pricing's pretty much attractive. Then again, since they are tightening their monetary policy, investors and businesses have to wait and look for their implications. Ray says that, and I'm quoting him here, "I would expect that we will have a tighter monetary policy in Japan, but it will have to be gradual because there can be very big losses by the Bank of Japan with its investment in bonds. Equities are still far more attractive than bonds." After the Russia-Ukraine and Israel-Hamas conflict, Dalio is not concerned with domestic conflicts alone, but rather has said that the risk of war between China and the U.S. has increased from 35% to 50%. Whew, things seem to be pretty bad indeed. Technology revolution. AI is a buzzword these days, so we're going to talk about it here in particular. AI technology is assumed to significantly impact the global order by reshaping various aspects of the modern world. With its ability to do data analysis, it will influence decision-making processes in fields ranging from geopolitics to economics. Geopolitics, governments and organizations will get intelligence on emerging threats, geopolitical trends, and diplomatic strategies. In economics, AI-powered automation and data-driven decision-making will revolutionize industries, job markets, and global trade patterns. AI-based innovations in healthcare, education, and environmental sustainability all have the potential to address pressing global challenges and improve the quality of life for billions of people worldwide. All this explains why AI has yet to prove if it's going to be positive or negative. As soon as it becomes practically implemented, we will get the clearer picture. This is why we saw Dalio saying uncertainties will increase in the future, and we have to be vigilant while making investment decisions. So in short, we just need to be very much focused on studying these same trends to when they happened before in history, make comparisons between now and then, look for the ways that people survived at that time, and then make well-informed decisions.